Shivangi Sarda as well on the show with us. Shivangi, hi, afternoon. What trends are you spotting in this market with this big reversal from what we saw on Saturday?
Having me. So we've seen, bulls are back and in action, of course. But of course, there has been pockets of buying, especially in heavyweights, that have lifted the entire spirits of the market. Now, specifically, I am looking at a travel and tourism pack, which is looking quite positive. The first pick on my radar is Indian Hotel. The stock has witnessed an excellent short covering move on Saturday, and you've seen that the last two sessions follow up has been extremely good. The volumes are adding up, which confirms the uptrend. And on a higher time frame, if we look at the monthly chart, this stock has been trading in an upward sloping channel, maintaining its upward trend line. So looking quite positive even from these levels, and there is a good upside potential here with a good risk reward. So recommending a buy here with a target of 860 and a stop of 810 zone.
Right, so that's Indian Hotel is what Shwangi is liking at this point in time. But Sudip, help us with your calls on the overall outlook on the markets, because as Shwangi was highlighting that the bulls are back in full charge, and what we are seeing is there's been no stopping. But what's catching your eye?
As far as market is concerned, I think we are in for a period of volatility. To assume that this excitement which is we are seeing today will continue, and we can't extrapolate that straightforward manner. I think we will have to wait for some more time before things settle down. The tariff which the incoming president had imposed on Canada and Mexico got reversed, at least for held back at least for a month, and that is what the market is cheering. But US futures is already moving into the negative territory. So there are a lot of other things which are happening. China has already retaliated with counter tariffs on multiple American products, which has been announced today. So we'll have to wait and watch how things move in the future. As far as markets are concerned, I think there are a lot of interesting pockets which needs to be looked at. And beyond this tariff and budget excitement, one sector which I like is specialty chemicals and chemicals. I think after many quarters of underperformance and pressure, it was actually a bombed out sector. Things have started improving. The numbers which have been coming from these set of companies for Q3 have been decent, and probably the green shoots of revivals, a turnaround is very clearly visible. So, and the valuation is very attractive in this sector. So whether it's an Aarti Industries, whether it's an SRF, whether it's a Deepak Nitrite. So I think these are the stocks worth.
I've frozen that connection. Just going to get back to Sudip in just a second. But why is Trent falling and Reliance rising up? We've got Jinay to answer exactly that.
Well, yes, Trent is under pressure. Well, we have a note by Elara Securities, who are maintaining a buy rating on Trent with a target price of 8,500. Now, what they believe is firstly the Shein app, which is making a comeback in India after its 5 years ban. It has partnered with Reliance Retail and has relaunched on February 1st, the app. Now the app has initially will operate out in Delhi, Bengaluru and Mumbai, and it has already got 10,000 downloads on the Play Store. Now if you look at Shein, it is basically known for its affordable range of western and fast fashion. If we talk about competition in India versus Shein, the fast fashion offers a fast growing opportunity, and the entry of Shein will likely hit up the competition. Now Elara believes that for Shein, establishing a reliable pan-India supply chain and delivering a model will take about a year or two, which is subject to again a brand traction going forward. Also, they're expecting that Trent's flagship brand Zudio, they will be capturing market share further, strengthening its brand recall. What they believe is that Shein's product offering resembles with that of Zudio. However, the price codes are mostly above 1,000 mark, whereas Zudio's price codes are mostly below 1,000 mark. They also believe that Zudio will further continue to sail through because of its differentiated offerings versus the recent entrants in the space such as Ustar, Style Up and Intune, which are yet to meaningfully scale up yet. And lastly, Shein may also not possess competition to Nykaa Fashion, as Nykaa Fashion's overall AOV is much higher at 4,000 to 5,000 rupees, and that is why Elara Securities believe given a buy rating on Trent with a target price of 8,500.
Okay, let me get back to Sudip. Sudip, can you hear us clearly?
I can hear you guys clearly.
Okay, great. We just lost you earlier. Sudip, what do you think could be the ramification of Reliance Retail bringing up the banned Chinese apparel portal Shein into India, and what kind of competition could that, really imply for the likes of Trent?
Well, I think it's a very interesting space to watch out for. But I must very clearly mention here that the strength of Shein as well as Trend, that is Zudio, is completely different. Zudio is completely offline, and their success was on the back of the offline store expansion and getting the hinterland to buy fast fashion through offline stores. Whereas Shein globally and in India is supposedly going to be completely online. So I think there is these are two worlds, and not necessarily these always collide. Let's wait and watch how things pan out. I'm sure Reliance at some level will want to bring the Shein products in their stores as well, but that's not a disclosed strategy, or that's not how Shein operates worldwide. So I'm not too sure that it will have a direct, immediate impact on Zudio, that is Trent. I'm not that sure. It probably will have a bigger impact on the Mishos and Mintras of the world, not Zudio directly, immediately. But yes, long term, definitely it will have an impact. But we have to also assume that Zudio will improve their offerings, product, and market penetration as the time goes by. So I won't start going and selling Trent based on this news, or start buying Reliance based on this news. There are reasons for doing both, but they are different.
Very valid point made there, because this kind of a trade-off is what we have already seen panning out when we compare QSRs versus a like of a D-Mart, and till date both exist, and we are also seeing some bit of a bounce on Avenue Supermart. So same philosophy if we apply Trent versus Shein, is Sudip highlighting that they both have their own markets. The brick and mortar model still exists for Trent. And let's see, but for today, definitely, given the competition arising, the stock is down in trade right now. But apart from that, what is making a good move today is the Pharma index, because overall we are seeing almost a 2% jump in that, and all of these large cap pharma names from the likes of Lupin, Aurobindo Pharma, Loris Lab, they are perking up in trade right now. Kunal, any stock that is standing out for you at this point in time? Because what I see that all these stocks rather are at the day's highest point and in for a strong closing.
Yeah, they are, but the charts are placed completely different for many of these names. For example, Lupin, the stock which is just about getting into a recovery. So from a recent high of 2400, the stock had fallen down to 2000 mark. Today is the first day where you're seeing a more credible, price recovery for the stock. Volumes lacking into this move. But then, for risk reward play, this could probably turn out to be a good play for short-term traders looking at a buy on Lupin, expecting that the stock, even if it comes towards a recent swing high resistance, that could be a potential at least another 90 points to 100, 120 points up move for Lupin over the very near term. That's closer to 2200 levels. For Loris Labs, for example, that stock is clearly showing signs of a classical breakout, but it's a highly volatile stock. Just about last week, when the stock was on, in the thick of news flow, there was almost like a 100-point correction in a matter of 2 days for Loris Lab, a 20% correction. And now we've seen the stock going through a V-shaped recovery. So that's the only concern with a stock like Loris Lab, because of its extremely high beta nature. The stock may not, like too many takers, from a risk-reward perspective. But for traders who are looking at a longer-term trend emerging, I think Loris Lab is looking quite attractive at current levels. Then from the other, more contra pick, I would look at Aurobindo Pharma. That's a chart which has formed a triple, divergence, bullish divergence setup. Recently the stock made a low of around 1130, 1140 levels, and now it's managed to come back about that 1170 mark. That's another name which is looking attractive.
Okay, those are some of the interesting trading ideas coming our way. But just look at, some of the auto names too. Even though Eicher did flare up after its monthly sales data came by, and Mondays or yesterday is when the stock reacted to that. You've got a Hero MotoCorp as well, which is easing off, and that's pretty much the case with M&M and Bajaj Auto too. Shivangi, what is your reading on the charts of the likes of an Eicher and, let's say, M&M?
Now, and it is witnessing good buying interest. But if you give me a choice to compare out of the two, M&M is much stronger comparatively, and we've seen that it has been rallying from the last 8 trading sessions. and good buying can be seen over here. There used to be a previous hurdle zones of around about 3,200 odd levels, which the stock did surpass today. Little softness from the higher zones today, but overall stock is quite positive. And I'm looking at the open interest data, which is also quite stable for this one. The stock is halting near its resistance zones right now, but overall auto stocks look quite positive, and this is one stock which will be more stable than the rest of the names, and we could look at levels of 3,300 odd levels next for this one, with a support of 3,150 zones.
All right, that's the chart check on some of these auto majors. But for today, clearly the theme has been the cap good related counters that are seeing a good bounce back. But other than that, some of these power finances are also holding on to the gains of more than 5%. And it's been throughout the day that we are seeing stocks like PFC and RSC holding on to such good gains. Shivangi, help us with your take. Any of the stock that you like at this point in time?
The names have been focused, and I'm looking at PFC. Of course, both of them have a very high correlation, but the stock has been, falling from the last 6 months, and we've seen that a small pullback move can be, of course, seen today. But it's important that it holds above 400 odd levels for the next rally to continue. Now, again, upside remains a little cap for both of these ones, and I would recommend a little wait and watch here for this space.
All right, so wait and watch is something that Shivangi is recommending, but amongst the two, PFC looks better when it comes to the chart check. Other than that, what is perking up is some of these jewelry related stocks, because stock like Senco, while Titan, we are waiting by for the numbers, are seeing good moves. But specifically on Senco Gold, Kunal, how do you see the movement? Because in last 6 to 7 trading sessions, we have seen a good jump in this particular counter, but where is the stock headed?
Yeah, I think recently the stock also fell through a sharp correction from 750 to 400 thereabouts as the low for Senco Gold, and now the stock has come back to from 400 to 530, 535. Very V-shape kind of a recovery for the stock, but it seems like that maybe the stock would just about ebb off from current levels of 530. I would probably expect that 500 could be a much better point for the stock. For an entry into the stock, and I would probably expect that maybe over the next 2-3 days you might expect some bit of cool off, because the RSIs on the hourly chart after this 5 or 6 consecutive day of up move for Senco Gold have come back into an overbought territory. So expecting some bit of cool off closer to 500 could be a good entry point for short term traders.
All right, closer to 500 could be a good point for the traders, so all eyes on that. But other than that, what is doing well today is the metal pack, because in the international market we have seen a bit of a cool off in the dollar index. And Sudeep, given this point, any metal counter that you like at this point in time? Because what we are seeing is that even after a decent set of numbers coming in from Vedanta, the commentary there, even Tata Steel reported its numbers. So what is your takeaway for the metal counters, because they haven't been doing much of late?
Well, I definitely like Vedanta. As far as overall metals are concerned, there are a lot of volatility with what's happening globally and what's happening in China. So I can understand the reason for the volatility. But if I have to pick one stock, which is what you are asking, I think I'll go for Vedanta. Multiple reasons, including both aluminium and zinc globally doing very well, and the prices are at all-time highs or near all-time highs. And the way the demand-supply situation is positioned, I think it's going to continue for some more time. Also, I must say that the entire demerger which Vedanta is going through, and creating 4 companies out of the current Vedanta, and I understand the shareholders' approval is expected sometime in a couple of weeks' time, and post that the formalities should be completed in few months. So significant value unlocking possibility does exist from a shareholder's point of view. So I think if I have to pick one, I'll go ahead and pick Vedanta at this juncture.
Sudeep, how critical will be the policy this time around on Friday? There is heightened, consensus that it could be a rate cut. Would that, you think, fill up the market further?
Well, I think market probably has already factored in the rate cut. So it's a bit of a concern, I would honestly confess. But rate cut definitely is sentimentally good. RBI needed to inject a lot of liquidity in the system. They have done by 1 week back. They created 1,50,000 crore worth of liquidity. Some more liquidity in the market would definitely help the market, but symbolically the rate cut will be useful. The transmission of a rate cut does take a lot of time, but creation of liquidity does immediately help the market. So RBI has done the creation of liquidity. Some more liquidity creation will actually help more. But rate cut has a symbolic significance. So let's wait and watch what happens.
Seems like the market could have already priced in, given how large a consensus it's now turning out to be. But other than that, Shivangi, wanted to get your sense in on the Nifty Bank, because today you're seeing a meaningful move, especially on some of these private banking names.
Has majorly contributed to ICICI Bank, and we've seen that this one's driven a good short covering move in the banking index. Now, Bank Nifty is above 50,000 marks, comfortably holding above these levels, which is quite positive. And this will act as the next, make or break zone over here. So till the time it holds above 50,000, we could expect 51,000 for the next level for Bank Nifty. And a support can be seen near 49,750 marks. But overall, the heavyweight banking names are showing more strength as compared to the smaller ones. So definitely Radar is on those bigger names. Now, also, we could see some sort of, aftermath in HDFC Bank, which is also looking quite positive. Now, at these levels, it's kind of making a bottom on the daily frame, turning from its 50 exponential moving average as well. So this one's looking quite positive for the next contributor for Bank Nifty. And we could expect around about 1770 odd levels in HDFC Bank.
Right. Okay, that's the take coming in on the banking pack. In fact, since we were just discussing with Sudip what to anticipate from the policy this time, let's hear out a couple of market opinion.
Monetary policy, when it comes, they can actually draw a significant comfort from the government move on fiscal deficit being brought down to 4.4. Therefore, they can actually go for an aggressive rate cut. Not only aggressive rate cut, I want to be even surprised if they go for a 50 base point rate cut in the 7th monetary policy. I'll take a bet on 50 base. The fiscal number roadmap itself is so good, I think they'll have enough room actually for them to cut.
Okay, that's the take coming in on the consensus that seems like it's going to be a rate cut from the RBI this time. Let's see how we're closing in, because it's been a good day. 350 points higher is how we're closing in for the day. Just want to mark what the European markets and pre-market US futures are indicating right now, because it's a lot more tempered, at least for the UK markets. The tariff uncertainty clearly lingers, even though it's a pause at this time. It's not a rollback completely clearly. The pre-market rate for the US futures as well, the Dow is down about almost 125 points, and the Nasdaq futures as well are lingering somewhat into the red. Sudeep, what's your own analysis of how the tariff implications or impositions are going to impact Indian companies per se, both good and bad?
I think it will have a significant impact. Look, a couple of things. One is, differential tariffs, theoretically should benefit Indian companies, because at this stage, at least, India is not at the receiving end. Assuming that China attracts tariffs and India doesn't attract those kind of penal tariffs, Indian exports should become technically more attractive as far as the markets are concerned. But the reality may be completely different, because let's take a case of China. Now, if China has been hit with a 10% tariff, the way things are and the way the Chinese government and the Chinese administration works, I suspect that China will devalue the currency sharply. Now, once China devalues the currency sharply to make their export, keep their export equally attractive, I think India will have a significant pressure to devalue also, to ensure they are in the race. So I think a lot of uncertainties are there in the economic and macro environment to correctly predict. But end of the day, if leaving aside all these gory technicalities, if you have to say what sector will benefit, I think textile exports from India should benefit. Indian auto components companies should benefit, assuming they are manufacturing in a geography which doesn't attract negative tariffs. Some of the other specialty chemicals, pharma, who are exporting into US will benefit. Let's hope that plays out this way. But I'm not very sure whether it will play out exactly in this fashion because there are so many uncertainties, around us.
So still like some of these chemical counters which could be likely beneficiary of the tariff war that we are witnessing right now. But with this, just a few minutes left for markets to shut shop. Let's start taking the BTSD ideas from both of our experts. And Kunal, you go first. Tell us what's making to your list.
So I'll go with large cap names. Kotak Bank is the first stock which I would suggest as a buy. Classical breakout, bullish flag formation for the stock on the daily charts. The breakout point is about the 1900 levels for Kotak Bank. The stock is selling about those levels. So expecting the stock to move towards 2050 plus mark. This could potentially be a fresh multi-year high for Kotak Bank. Stop loss could be kept at 1850. Reliance Industries is is the other stock which I would suggest as a buy. Had given this recommendation in the morning. With a target of 1300. Now with the move for the stock, especially in the last half an hour or so, would revise the targets higher to 1320 for Reliance Industries and stop loss could be trailed to 1260.
All right, Reliance and Kotak Mahindra Bank, two of the large cap names, is what Kunal is liking at this point in time. But Shivangi, would you also like to go with some of these large cap ideas or something from the broader market as well is what is making to your list?
Manappuram, this stock has also been gradually shifting its pace higher. And we've seen that from the last 4 months, it's consistently making higher tops, higher bottom. It's showing a price volume surge today, which is kind of after the consolidation of the last few sessions, which is confirming a good uptrend over here. So recommending a buy here. Now, the next target that we could look at is 215 and with 200 as a stop loss.
Okay, those are some interesting ideas coming your way. Kalyan Jewelers, that's spiked up about almost 13% in trade. We'll skip that. That's really been a special situation name, so to speak. But other than that, ABB is closing in on an 8% gain today. NCC higher by 6.25%. HAL has surged up about almost 6%. There's Cummins as well looking very, very smart, a good 6% traction there as well. And some of these power names as well are looking very strong. Both power financiers as well as, the entire supply chain ecosystem, Tata Power, PFC, REC, IEX, NHPC, all these names looking very, very smart indeed right now in trade. Sudeep, do you think when it comes to the entire supply chain of power, you think the valuations have corrected enough, and can we now look at adding positions within the power space?
Well, Aisha, I have been positive on the entire power space. I think there's a structural change happening. And this structural change and structural benefit to the sector will continue to accrue in the foreseeable future. So I have a kind of a 5-year time horizon in power. The demand is robust. Every segment of the power industry, whether it's distribution, transmission, manufacturing, components, financing, are going to benefit. And that's what has been happening. Now, yes, prices have corrected, and definitely power sector companies can be bought for a long-term portfolio. Short term, it's very difficult to predict which way the markets will move and how the prices will behave. But if you have a time horizon of, let's say, 1 year plus, I think it's definitely worth looking at power sector companies. Manufacturing, like companies like NTPC, definitely a good buy, even at current level from a 1 year plus perspective. If somebody is looking at, the financing, the power financiers, again, good buy from a slightly longer term perspective. You look at the boiler manufacturers like BHEL from a long term perspective, definitely a good buy. Forget what's happening in the short term. Power component manufacturers, I think when one needs to identify the stock, buy in and wait for 1+ year. That's what you need to do in power. All are in for good run.
Stretch your time horizon and you will make money from within the power sector. Sudeep, so good having you on the show. Shivangi, Kunal, we'll let you guys go on that note as well.